London, where the reaction was especially bad because the exchange here was closed Friday due to storm-related power cuts. The FT100 index lost more than 150 points in the first 2.5 hours of trading, then plunged to 302.1 points down when Wall Street opened. London stayed open an extra hour in an attempt to recover, but when the closing bell sounded, the index stood at 2052.3, down a whopping 249.6 points. In Paris, the Bourse indicator fell by 10.36%. Food companies which export to North America were especially hard hit. In Frankfurt, West German stock prices posted their largest losses ever. The Commerzbank index tumbled a record 132.5 points to close at 1876.6. Earlier in the day, Tokyo's Nikkei average lost 620 yen in its sixth largest fall on record. Dealers blame the worldwide decline on the sharp drop in the dollar and fears of higher interest rates. All the money that drained from stock markets went into gold, which closed in London at a 6-month high of $485 an ounce, up $19. In London, I'm Shelley Carabell for the Nightly Business Report.
This is Scott Gervie in Chicago, where today traders were using words previously forbidden: panic, crash, free fall, meltdown. They just put their hands in their pockets and stared in disbelief as the Standard & Poor's 500 future fell and fell and fell.
People are very afraid that when they have profits or they start seeing losses, and they all want to do the same thing at the same time. So moves that take months can end in weeks. It's just this very quickness of this is just stunning. That's the main thing that's different about this move. I would have assumed that it would have taken a few weeks. It's only taken a few days.
Whether index futures and options traded in Chicago through program trades and portfolio insurance strategies actually caused the traumatic decline or just increased its magnitude is a question the academics will ponder in the months ahead. Today, for the traders, the only thing that mattered was survival. Those that did not will be putting their seats up for sale in the days ahead. Those that did are looking for a bounce back.
We will see a calming effect in the next day or so. We will see the market stabilize, and then we will see a reevaluation of all the information that's caused this break to occur. And I think the market will stabilize and start back up to some degree. I don't think this is the beginning of another huge leg on the downside.
These traders will be back here at midnight in a special emergency clearing session to clean up the paperwork that accumulated during today's frantic trading. In Chicago, Scott Gervie for the Nightly Business Report.
This is Bob Friedman in Washington. Federal Reserve Board Vice Chairman Manuel Johnson tried to calm the financial markets today. In a midday speech before an American Stock Exchange conference, Johnson predicted a healthy U.S. economic expansion with little inflation, and he tried to head off Wall Street fears of a plunge in the dollar.
What we don't need at this point, after we've had a 40 to 50% adjustment in the exchange rate against the other major industrial countries' currencies, is to try and depress the dollar dramatically from this level on.
Early this morning, as analysts here nervously watched the Dow plunge 200 points, SEC Chairman David Reuter raised the possibility of a halt in market trading.
I'm not afraid to say that there is some point, and I don't know what that point is, that I would be quite anxious to talk to the New York Stock Exchange about a temporary and very temporary halt in trading.
Reuter did talk with New York Stock Exchange officials early this morning, and the feeling was that the market's dip was caused by weak economic fundamentals. And while exchange officials are worried about market volatility, the American stock exchange's Arthur Levitt opposes a temporary market halt.
I think the effect of any artificial interference in our markets is to suggest that the markets are not broad and liquid enough to handle any kind of economic phenomena. And that, I think, is a dangerous message to send about markets which historically have been as resilient as ours have been.
Reuter says that the SEC is concerned about stock market volatility, but wants to wait until after this current surge to examine the problem further. But now, after the worst day in stock market history and volume that went beyond some exchanges' capacity, the SEC and the exchanges may be under pressure tomorrow to intervene if the Wall Street rout continues. In Washington, Bob Friedman for the Nightly Business Report.
New York Stock Exchange Chairman John Phelan declined to characterize today's market action as a crash, saying what happened was a significant correction after a 5-year run-up. And he said the exchange will open as usual tomorrow morning. But first, for the specifics of what happened to stocks today, here's Paul.
As panic selling erupted on those foreign stock exchanges, as you just heard, prices on the New York Exchange continued to plunge early today in an extension of last Friday's record one-day loss of 108 1/3 points on the Dow Industrial Average, down to the 2246 level. The opening sell-off was massive as the Dow plummeted 201 points by 11 a.m. with 1,600 stocks down and a mere 70, mostly precious metals issues, moving higher while the tape was running over an hour late. What was the cause of this wholesale liquidation? Our frequent market monitor guest Jim Stack, editor of the Investec Letter, who was worried about the bull market on his last visit with us on June 5th, told me one of the major factors, if not the major factor, was forced mutual fund redemptions. Add to that the downside pressures exerted by snowballing portfolio insurance and futures-related selling, and the industrial average tumbled to a 271.5-point loss by 2 p.m., with only 50 stocks up, 1,850 down. With not even a hint of any meaningful technical rebound, stocks continued to plunge on record volume throughout the afternoon, with the Dow off 296 points at the 1950 level at 3 p.m. The final hour saw the bottom drop out as more margin call and mutual fund liquidations, combined with all those wonderfully innovative computer-driven strategies, well, they pummeled the Dow Industrial Average down to a record loss of 508.32, putting it at 1,738.74, which is also by far a record percentage loss of 22.5%. No available high or lows. They're still figuring out. The tape was 2 hours and 10 minutes late at the final bell. Trading volume, obviously a huge record, 604.4 million, and 1.1 million shares of up volume, nearly 603 million shares of down volume. The Dow Transport's tumbling a record 164.75 points. Utilities down a record 29.16. Dow 65 a record loss of 168.5 points. And the closing tick showed no mercy, still a very negative minus 933. Standard & Poor's 500, oh, these are all record drops, 57.87, 67-point loss in the 400. The 100 off over 58 points. SPOX 250 down 30 and a third. New York Stock Exchange Index itself down 30 and 1/2 points. NASDAQ tumbled 46.12. Value Line off 30 and 2/3 points. And the Wilshire 5000, a record loss of 503 and a fraction. Fixed income government securities fared very well today as investors sought safe haven for their money in issues like the 30-year Treasury bond, which had its biggest one-day rise since May 26th of this year. But corporate and municipal bonds moved sharply lower. But let's look at that long Treasury, a winner for today, a nice gain of 1 and 9/32. The GMAC corporates are, however, down 2.5 points, but the Shearson Lehman Long Treasury Bond Index up 22.14. Investors buying safe issues. And the municipal market down 1 3/4 on these Jacksonvilles, down at 75.25 bid, and Fed funds at 7 5/8%. Finally, closing at 7 5/8. Now, because of the nature of what happened in the stock market, let's go immediately on to review the damage. And we see only 42 advancing issues today at the close, 1,965. All this combines, of course, very nicely with that 508-point loss in the Dow. And still, as I say, no new highs yet available or lows. Topping the active list on 12.6 million shares, Pacific Corp tumbling 4.5. Cincinnati Gas and Electric off 2 1/8. American Telephone reported flat third-quarter earnings, 47 versus 48 cents last year. Stock down 6.5. General Electric tumbling 9 1/8. Exxon off 8 1/2 points to 35. IBM tumbling 31 1/4 points to 103 1/4. Ford down 15 1/4. American Express, a Dow stock off 9 5/8. Santa Fe Southern Pacific and the Dow Transport's down 9 1/2. And 10th in volume, Gillette tumbling 9 points down to 24. Among widely held issues, AMR, parent company of American Airlines, down 9 3/8. Bethlehem Steel plunged 5 1/2. Caterpillar Tractor down 14 1/4 points. The company reported a tremendous third-quarter turnaround, $1.47 in earnings versus a loss of 26 cents last year. Digital Equipment plunging 42 1/4 points. Kodak down 26. Merck off 33. Polaroid off 8 1/4. The only two decent percentage gainers, Newmont Gold and Callahan Mining, the precious metal stocks, as I mentioned earlier, the only ones to rise today. Harcourt Brace Jovanovich down 3 3/8. The biggest percentage loser. USX tumbling 13 points. GAF off 18 points. It's no surprise that Samuel Heyman and his investment group is now reconsidering the $66.50 a share buyout bid on GAF. Avon Products, that huge percentage loss of 11 5/8. Over in the American Exchange, a record drop of 41 points in the index. Trading volume of 35.4 million shares, a record on the curb, and only 23 advancers, nearly 950 losers. Topping the active list, Echo Bay Mines down 2 points, even though it's a gold stock. Very strange performance. Home Shopping Net down 1 1/2. Texas Air plunging 4 1/4. Wang B off 4 3/4. Although Wang reported 14 cents in earnings for the first fiscal quarter versus a loss of 19 cents last year. Alza down 9 1/4 points. And then America's Trust Amoco following, of course, Amoco stock down. This is the appreciation component, and the same was true of Atlantic Richfield Americas, or ARCO, down 8 3/8. NASDAQ trading, a loss of 46.12, obviously a record. Trading volume was not quite a record on the over-the-counter market, about 223 million shares. Only 137 stocks advanced, 3,573 lower, 100 index off 55.25 points, and then a little. Intel topping the active list, plunging 10 points. Apple Computer off 11 3/4. Lynn Broadcasting down 5 3/4. Genentech plunging 12 3/8. Lotus Development, just mindless selling all the way around here, down 6 there. Microsoft off 19.5 points despite higher earnings. Sun Microsystems plunged 4.5. It's in a deal with IBM. MCI Communications down 1.5. It reported higher earnings, 8 cents versus 6 cents in last year's third quarter. Henley Group down 3, and Liz Claiborne plunging 6.5 points. Northview Corporation, one of the few big gains anywhere for the day, up 4 1/4. The company's received a $22 a share cash buyout offer from CalMark. Georgia Gulf down 8 1/4. The company reported higher third quarter earnings, but said probably have lower fourth quarter earnings. And Culp Incorporated down 1 point. It's expecting to have lower earnings for the upcoming quarter. My street critique guest tonight is Mr. Stan Weinstein, editor and publisher of the widely followed professional tape reader Market Letter. To say today's market sell-off was anything less than horrendous would be to say that one day in 1945, temperatures were a little higher than normal in Hiroshima. I asked Stan Weinstein, what does it all mean? And where, in his opinion, will it all end?